Assalamualaikum guys. We are reviewing some misconception about Islamic banking today, and the third misconception is about the description of the Islamic banking operation. That Islamic banking operation today are driven by the profit loss sharing system or the risk sharing system. And that has been the narrative provided by trainers and educationists and people at the marketing side. But this has not been, true because the Islamic banking today are mostly driven by debt financing. But then we can see quite a lot of this misconception also in the academia, and when this some of these academics, when they were able to observe that Islamic banks are profitable, that Islamic banks are efficient, that Islamic banks are sustainable, or they are able to they are more stable than the conventional bank under an economic crisis. So they will say that all of this due to the fact that Islamic bank are based on the profit loss sharing system. That is not true, at all, because we know very well that in general, the Islamic bank finance, or the Islamic bank provide debt financing product. Home financing are based on tawarruk and murabaha, which are debt financing. Automobile financing are based on ITAP, these are ijara debt financing. Personal financing, credit card are based on tawarruk and murabaha. So everywhere you will see that Islamic bank are not based on profit loss sharing, but they are based on debt financing. But on a more substantial level, we also need to look at this PLS. Because at the banking level, our perspective have to be more wholesome. So we need to see the bank, from three side: funding side, that is where the bank obtain the funds in making murabaha; and asset side, how does the bank use the deposit fund to generate revenues, this asset side; and then capital side, this is essentially the capital that the bank holds against the asset side, right? So are these funding, asset and capital based on profit loss sharing, or they are based on debt financing, or they are mixed into debt and equity? So that is what we are here today to clear up the air, so that people can understand a bit more better about this Islamic banking business. Firstly, when we look at the funding side, this is the sources of fund, the fund that the bank uses to do murabaha, to do mudarabah. Are these funds profit loss sharing funds, or they are debt fund? As we see in conventional banking, that all deposit funds are debt fund. These are funds obtained, the funds that the bank obtained from the depositor as a loan, and the contract of deposit is a contract of loan with interest, where the depositor have the right to withdraw at all time without warning and reminding, and the depositors is contracted with capital protection and fixed income. So these are the deposit funds in the conventional bank. But in the Islamic bank, we have the Islamic deposit that can be based on debt, which is what we are looking now, meaning that the Islamic bank issue current account based on wadi'ah damana, they issue saving account based on tawarruk, based on wadi'ah damana, they issue deposit fund which is based on tawarruk financing. So we can see that the sources of funds in the Islamic bank are coming from deposit funds, because one, the bank declare this Wadi'ah Damanah Tawarruk fund as a deposit fund, by nature, the Basel Committee of Banking Supervision will see these funds as a loan fund that the bank obtained from the public, and it has to be treated as a loan fund, meaning that this fund, must be capital protected, that the income must be fixed, as as what we saw in the conventional interest-based banking, that the depositor have the right to withdraw the deposit on call without reminder, without warning. So these are deposit fund. If the Islamic bank is to label their fund as deposit fund, so these are the implications that they have to face in the event of withdrawals and whatnot. So we can see that the funding side is not based on PLS, it is based on debt finance, right? So the Islamic deposit will guarantee depositor capital protection and the fixed income that was contracted in the Tawarruk deposit. So these are deposit fund. They are not profit loss sharing fund, but in some aspect, some of the funding are coming from equities. They are coming from PLS. For example, in Malaysia, the regulator require the bank to segregate the deposit fund, which is a debt fund, a non-PLS fund, from the investment account fund, and that is an equity fund. So the investment account fund is a purely equity fund where the alpha factor is equal to 0, meaning that it is a pure equity. So when the Islamic bank uses this investment fund to generate revenues, risk in this project, will be borne by the investor alone and not by the bank. So the bank will not hold any risk in the project funded by the investment equity fund. Whereas when the alpha factor is equal to 1, then the fund will become a pure deposit fund, meaning that the bank will carry all risk in the Murabaha or in the Tawarruk. So when the Islamic bank uses the deposit fund with alpha factor equal to 1 to make Murabaha or to make Tawarruk, the bank will bond all risk in those assets. But so in Malaysia, that has been defined clearly. What are deposit fund? What are equity fund? But in other jurisdiction in the IFSB country, Africa, Indonesia, in the Arab country, they are using the alpha factor between 1 and 0, meaning that the funding can be a mix of PLS and debt, a mix of debt and PLS. So for example, if you have a alpha factor of 70-30, so meaning that 70% of the risk in the asset funded by these funds are carried by the bank, and 30% is carried by the so-called deposit cum investor. So this juggling of the alpha factor between 1 and 0, this is where we can see that the funding side is driven by both debt finance and equity finance. And in places like in Malaysia, where we do not carry that system anymore, that the bank must declare whether your fund is having an alpha factor 1 or 0. If it is equal to 1, then the fund is a deposit fund, where the bank will carry all risk in the Murabaha, funded by that deposit fund. And if the alpha factor is 0, then the fund is an investment fund or equity fund, where all risk in the venture funded by that fund will be carried by the investment account holder, and the bank will not be carrying any capital against those exposure. Very interesting issue regarding this PLS funding plus debt financing funding in the Islamic bank. We hope that we can further discuss this matter in the coming video. I'll see you again. Thank you. Assalamualaikum warahmatullahi.